I want to give you 20. Yes, that's right. So get some popcorn, get some snacks. All of these terms are things that you can look up online, but I want to make it easy for you to understand versus giving you some very well refined. So if you're in the market to buy, whether you are a buyer, whether you are a seller, I recently had some clients that were working with another agent. They never signed a buyer agreement. What's going on, guys? Thank you for tuning in to yet another episode here of Living in El Paso. I'm 𝐼𝐫𝐞𝐞. For those of you that know, I'm a local real estate agent. I have my own real estate team here in El Paso. I'm also an investor, and if you are in the market to either buy here in Texas or in any other state, please feel free to let us know. We have agents throughout the US that would be more than happy to help you, and we only work with the best of the best, so you would make sure that you are in great hands. Now, in today's conversation, I'm actually really excited and I want to give you 20. Yes, that's right. So get some popcorn, get some snacks. I promise not to make it long because all of these terms are things that you can look up online, but I want to make it easy for you to understand versus giving you some very well refined an explanation that's just gonna throw you off and be like, what are you even talking about? Real estate terms, okay? So if you're in the market to buy, whether you are a buyer, whether you are a seller, or if you are VA eligible and you are also looking to either buy or sell, there will be some goodies here for you guys to really take advantage of and make sure that you understand. So I recently had some clients that were working with another agent. They never signed a buyer agreement. They didn't really feel that the person was taking just the proper time to explain how the contract was going to work, how the concessions were going to work, just everything that was involved in the transaction. So needless to say, they weren't happy. They decided to reach out to us. We've been helping them now. We're actually under contract, about to close. And it really inspired me to make this video because I personally think that whether you're working with us or you're working with anybody else, you want to make sure you know the basic terms of a real estate contract. So with that being said, let's dive deep into today's topic. Now, the first one I want to cover is earnest money. Now, the simple way for you to remember earnest money is basically the money that you are paying the seller or the builder if you're buying a new house, that you are essentially giving as a guarantee that you are serious about their house. Now, this money is typically returned to you as a credit at closing. Now, discuss this with your agent because obviously everything is negotiable, and if for some reason you default and you decide you're not going to buy the house because something happened but you're still qualified, you could potentially lose your earnest money. So make sure that your agent is going over this because there are certain stipulations that a contract can have where you would either have this money credited back or not. And of course, if you were not aware of what you signed, that could be a big problem. Now, two on the terms here that we're going to go over through is going to be your option period. Now, I know some states call this different. Some of them call it a grace period. Here in Texas, it's called an option period. And basically what this means is it's the time in which you, as the client that is purchasing the home, is putting an option period to have the unrestricted right to cancel the contract for whatever you decide. Literally, whatever you decide. So you agree on a certain amount that you're paying the sellers. Okay, so sellers, listen to this as well. You are agreeing to tell the seller, hey, I'm willing to give you $100 for 5 days as an option period for me to have the right to back out. Now, for some of you, depending on where you're watching this video from, even if you're, in Texas, certain parts in Texas are a little bit different. So you might be seeing $100 and looking at it like, where in the world would they accept $100? It does happen in some contracts, especially in the sales price that we see here in Texas. Personally, in El Paso, typically on a $250,000 home, we can put an option period of $100 for literally 5 days and have the unrestricted right to terminate. But then that same, let's say situation in which now we have a house that's $850,000, might not get away with just $100. So if you're a seller, make sure that your agent is explaining to you when they present you the offers that are coming through, how many days the option period is for. Now I will say this, some, depending on the situation that you're encountering, might not ask for any option period. So if you're in a situation in which you have, let's say, multiple offers, then of course, typically we recommend, now this is for the buyer, our buyer to say, hey, let's not ask for an option period. You're set on wanting the house. And if we put an option period, that could potentially affect you in how you're going to be perceived with the other offers. Again, talk to your agent. This is a case-by-case situation, but you definitely want to make sure that you understand before you sign and agree to an option period that could potentially be just not beneficial for you. And if you think about this, if you accept an option period that is very, very small in terms of the amount that they're giving you, let's say it's $50 for 7 days, that literally means that you're going off the market for an entire 7 days for the buyers to inspect the property, which at the end of the day, if they decide, hey, I don't want it, I don't like it, or they're being very unrealistic about some of the things that they're asking for, they have the right to back out, and you just got $50. So food for thought there. Now, term number 3 is going to be escrow. Escrow basically is the title company, okay? We call it being under escrow, meaning that you're officially under contract, and now all parties have signed. We send the documents over to the title company, and now officially we are under escrow. Now what that means is, again, the title company is the neutral party. They are holding all the monies, that's what they call it, yes, monies, not money, monies, from both sides. So in this example, let's say we were giving the option period and the earnest money. If we are the buyers, they're going to save that at escrow until closing, okay? So escrow is simply ensuring that they are holding everything as a third party. They do not represent me, they do not represent the seller, they do not represent the buyer. They are a third party that is simply there to facilitate this transaction. Now, term number 4 is the appraisal. Now, the appraisal is something that I want to give you a story time about, because I have seen certain nightmares happen with this. And personally, if you're a seller, make sure that you're pricing your home correctly, because even though I might have a buyer that is willing to offer you, let's say your house is priced at $500,000, and let's say you have 5 offers, right? And we come in and say, hey, we love your house. We're willing to give you $600,000. You're like, heck yeah, let's do it. Let's write it up. Not so fast. If we didn't actually sign an additional addendum that is going to waive our unrestricted right, essentially the right that we have to now back out in the event the appraisal comes in below market value, which chances are, if you price it at $500,000, you were already priced at market value. So us offering you $600,000 means more than likely it's not going to appraise at $600,000. And you might say, why is that important, Alexa? Well, because then the buyer, okay, so if you're a buyer, keep this in mind, is now protected, basically meaning that if they decide to back out because the appraisal did not appraise at the $600,000, you, my friend, just lost a bunch of time under contract on a home that you hoped you were gonna get $600,000 for, but in reality, it was only worth $500,000. So again, everything is negotiable. I will say this, okay, before some people in the comments say like, well, they could have signed that addendum and all these other things. Yes, everything is negotiable, but just make sure that somebody's taking the time to explain this to you. Whether you're the buyer and you're making an offer above asking, make sure that you know also what you're doing. Because if you do want to set yourself apart because you are in a multiple bid situation and you are competing with other people, there is an addendum that you can sign that will guarantee up to a certain amount. It could say something such as not to exceed $600,000. The buyer will cover X amount, in this case up to $100,000 out of their own pocket. So be very mindful of that before submitting something above asking price. And a quick little story I'll get into with that situation. I personally have had sellers that are very set on a specific price, even if you tell them that it's not the best decision for them, because the appraisal can always come in below market value. And I will tell you this story time where a client essentially They were set on a certain price. I told them, hey, I would not recommend it. Because they were friends, I agreed to, again, list it because we're still able to say, no, I don't want to take on a listing if we just think that, you know, the seller's being unrealistic. We're also the buyer. You know, we get to choose who we want to work with, just like you should choose who you want to work with. And in this situation, there were a friend, so I was like, okay, I'm just telling you, I don't recommend it. Long story short, the appraisal, you know, we listed it for the top of the market. Luckily, some of the ads I ran got us a great buyer. They were interested, but I did tell the buyer, hey, we personally, the price of the value is a little bit higher than, you know, what possibly the comps are going to come back at. Well, they were okay proceeding. The seller was okay proceeding, but then the appraisal came back and it was below, like I had mentioned, that was going to happen. And now the seller was not actually willing to reduce the price. The buyer was not willing to increase the gap difference that we were hitting here. And needless to say, the deal did not go through. So now essentially we are marketing the house again, pricing it adequately, but this is parts of the things that you just want to make sure your agent is going over with you. And please, like I know, because, you know, taking off my real estate hat, taking off my investor hat, when I personally had a realtor, and for those of you that have been following the channel, you know my nightmare story with my first realtor that, you know, before I was licensed, when I bought my first home, she was just very rude. I bothered her with simple questions just because I was new and I didn't know what I was doing. I was trying to buy a home and I just basically annoyed her. I say this to you because when that happens, sometimes it leaves this bad, you know, like stigma, it leaves this bad energy with like now realtors in general. I do want to tell you, we're not all the same. And when you take the time to interview your person that you're going to hire, make sure you really trust them, because sometimes I've found that some agents will like advise their client like, hey, I think that we should offer more because of what I'm seeing in the market. Or sometimes they say we should offer less because it's been, you know, a good amount of days on the market. And if there's no trust between the agent and their client, the client tends to feel like the agent is only recommending that for their own self-serving interest. And I will say, yes, there's some agents out there that are like that, unfortunately. But not all of them are like that. And if they're advising you a certain thing, like for instance, when I have advised my clients like, hey, we should actually offer more because there's literally like 10 other offers that this house has, I will literally like show them a screenshot of the conversation that I had with the listing agent. But they also trust me. They know that at the end of the day, if I'm sharing something with them, it's because I just want them to have the best chances of getting the home. So just make sure, that's a little quick tip there that you definitely want to make sure you're doing as well. Now, tip number 5 is going to be your closing costs. Now, closing cost, okay. So for those of you that have not watched my latest video talking about the NAR settlement, check it out after you're done watching this video, please, so that we can go over the terms. But check it out because it is explaining to you how real estate commissions have always been negotiable. But unfortunately, again, going back to the whole transparency, not everybody is aware that it's negotiable. So with that being said, you have to be mindful of the fact that because everything is negotiable, closing costs include your taxes. It includes things such as your title insurance, lender fees, agent commissions. All of this is negotiable in terms of the in terms of the agent commissions, but the other ones are just set in stone, and that's just what your lender fees are going to be, and that's just what your title and taxes are going to be. Talk with your lender, talk with your agent to ensure you really have a clear breakdown as to where these closing costs are coming from. Remember, the 2 major expenses when you're buying a home is going to be your down payment and is going to be your closing cost. So for those clients that have been in the market and they have been looking to get closing costs, typically we go for the houses that have been on the market for a little bit longer, or we will negotiate with terms, meaning that we're gonna make it very favorable for the seller in the terms of the contract. And maybe even if it's not too old on the market, they'll still be willing to because we're giving them very, very good terms. So keep that in mind before you go and start looking for houses. Now, tip number 6 here on terms that you should be aware of, and that is your title insurance. I get this question a lot, like, what is a title insurance? The easiest way for you to think about it, you know how you have a car and you have your car insurance? It's the same exact thing when it comes to a house and having a home insurance, okay? Now, don't get this confused with PMI. PMI is totally different, and that is the other little pro tip that I will give you. PMI is your premium mortgage insurance. What that is, it is a way for the bank to basically protect their investment. Let's say you are my client and I am the bank, and I tell you, hey, Mr. and Mrs. Client, I'm gonna loan you the $500,000 that you need for your house. However, I need to be protected that my money is gonna come back if you die. So what I'm gonna do is I'm gonna have you pay a PMI that is going to go directly to a little account that I'm gonna have in the event that you pass away. Now, here's a caveat to that. You might think, oh, that's great. That means that if I die, my loan is protected and I don't have to worry about it. No, that's not the case. So make sure you talk to your agent about this so they can explain it to you, because I don't want to make this video too long, but it is something you want to distinguish. If somebody were to fall near your house, if something were to happen with your roof, that is what your title, your home insurance is going to be to this, the rescuer of that situation. So really, really important, but definitely understand the difference between the two of them. Now, term number 7 is going to be a survey. A survey is crucial, and depending on what the contract says, it's either going to be paid by the seller, it's either going to be paid by the buyer, or the seller will provide an existing survey with the T47 form. That basically is going to be a form which is notarized, which is showing that this form is, valid, it has not been infringed upon. Again, talk to your agent to go more in depth about that. But essentially, this survey is very important because it's what outlines what property you're buying. The last thing you want is to find out that you're buying a home that actually says you have more property than you really do, and then realize that when you already closed on the home. So a survey is super important. Make sure that you are getting yours and that you actually understand what it's saying. Now, term number 8, the HOAs. So HOAs is something that you definitely want to be mindful of. I have clients on both sides of this spectrum, actually. Some of them love HOAs and they swear by them because it can be nice to have your area, community, parks nicely, watered and nice plants, and all the houses very symmetrical and very similar. But then you have those other clients that don't like that and don't like to be told what to do with their house that they're paying very, very hard for. So making sure you know what an HOA is super important. It's basically a homeowners association, and if you have an HOA, typically you're going to have an additional monthly fee for that HOA. Now, again, it depends. Some places have them quarterly, some places have them monthly, some have biannually. Find out before you sign on the dotted line if there is any HOAs. Now, term number 9 is going to be deed restrictions. This is basically something that's going to outline if there's any restrictions on how the property can be used. This is super important, and title should be able to give you all of this information along with once you're actually under contract, and also the seller should be very transparent about this, because chances are if they bought the home, then they're also aware of how that should be, a problem if there is something that can come back from that. But basically, this is something you just want to be aware of. If it's zoned for what you need it to be zoned for, maybe you're buying a land that recently happened actually. We had a client call us. They were looking to sell their property because they bought it in a land area where essentially their realtor didn't explain to them that what they wanted to build later was not going to be allowed because the zoning there was not for what they had purchased the land for. So keep this in mind, super important. Okay, now term number 10, and that is going to be, what is a contingency? Now a contingency, just think about it. If so, what would happen? So the way I see it is, I am going to buy your home. However, I am going to place a contingency, with basically meaning that if I sell my home, right? Let's say I'm the buyer, you're the seller. I will buy your home, but I have a contingency upon selling the home that I currently reside in. Because if I don't sell it, then I'm sorry, but I can't buy your home. A contingency is super important to understand. There's different contingencies. So obviously, Again, I will sound like a broken record by this point. But make sure you talk to your agent about this. Contingency can be a game changer for you and protect you. And also if you're a seller and you don't want a contingency, it can really hurt you. So make sure they're being very transparent about this so you understand before you execute a contract. Now, term number 11, that is going to be inspections. Like, what exactly is an inspection? So an inspection, I have had people sometimes tell me, Alexa, I'm a great handyman. I don't need to hire an inspector. Mr. and Mrs. Client, if that's what you want to do, that's what you can do. But I don't recommend that. Why? Because even though I know enough about real estate to obviously allow me to invest in real estate, I would still want to hire a professional person that knows the ins and outs of the actual building itself to detect any structural problems, detect any leaks, detect any duct problems. Really just understand what you're buying. And this, again, is something that I want you to take with a grain of salt because every situation is different. So if you didn't do an option period, like we talked about earlier, then chances are you're going to buy the house regardless. But if there's something very, very major that really just like, you're like, okay, no, this house is caving in, Alexa, then obviously that can also be a red flag for your lender, which can get you out of the contract. But again, talk to your agent. I'm not here to give you legal advice. I'm just here to give you some examples of what the contracts, what the terms should be and what you should be looking out for. But make sure that you do hire an inspector because inspectors can really make or break a deal. I have had just depending on the price point, some of our off-market listings that we do like a pocket listing for. Whenever we're actually working with the seller, we do an inspection before putting it on like the market or sharing it with the people that we're going to share it with, because we want to make sure that we go into the negotiation from a point of power and actually knowing what we're selling versus them come back later and then tell us, oh, you have all these problems with the house, I want a $50,000 price reduction. So make sure you do an inspection and you're doing it the right way. Now, term number 12 that you should be aware of, that is an amendment. So an amendment is essentially a additional document like we talked about earlier. It's going to be a document that is going to allow you to stipulate anything additional. An amendment could be for the appraisal, an amendment can be for price changes, an amendment can be for names of the contract to be changed, for closing cost concessions, you name it. Also, it can be for appliances that you want to actually have conveyed to the property, which convey is just a fancy word for actually stay with the property, that is going to be part of the property selling process. Now, there is different amendments. Again, there's a non-item realty addendum for that. So an amendment is more going to be for something that you're going to fix versus an addendum versus something you're going to add. Just remember that. Addendum is adding, amendment is fixing. Okay, so just remember that, and I promise you, you're going to be that much more ahead of all the other people that have signed an amendment or addendum and they don't know what they're signing. Okay, now 13, we're really gonna just go into the different types of loans here. I'm gonna highlight the 3 main loans that you should be aware of the terms in terms of what they all mean. So the first one is going to be a conventional loan, is going to be a type of loan that is typically not going to actually be backed by the government, okay? So what that does is that it requires a higher down payment and a higher credit worthiness. Now, why is this important and why should you even want one of those? Well, because it actually saves you on your PMI. So conventional loans actually don't have a PMI, the premium mortgage insurance we talked about earlier. Now, talk to your lender about this because again, there's different products. So you might say in the comments down below, that's a lie. And I have a conventional and it has a PMI. Again, there's different products. So the product that I typically like when it comes to a conventional loan does not have a PMI. Now, with that being said, the reason why some people like it is because it saves you in terms of what you're paying monthly, and depending on the loan structure, you might actually get a lower down payment, contrary to all the beliefs that there is around conventional loan, that they're a higher down payment. It can actually end up being up to a 3% down, which is a great deal for some people. And if your credit, justifies it, I would highly recommend you checking it out and talking to your lender, talking to your agent. Just talk to your agent. Hopefully you're hiring somebody that you feel comfortable enough to be very vulnerable with, because they should know and they should have the best lenders that they can really pick at and tell you like, look, you want to go with this person because they're going to do a great job. I have my lender that I go to for my VAs. I have my lender that I go to for my conventional. I have my lender that I go for my FHAs. I have my lender that I go for my investors. So I have different lenders. I don't think that it's a one size fits all. So make sure that you are talking to your agent about that. Now, an FHA, okay? So an FHA loan is going to be actually backed by the government. And the main key distinguishing factor here is going to be that an FHA loan is going to allow you to have again, this is depending on the situation, but typically a lower down payment. They're going to be a lot more lenient with your credit, and in some cases also your DTI, which is your debt to income ratio. So this is something that can be very beneficial for some clients. Again, just consider the fact that you will have a PMI. I personally got my first house with an FHA. It was great. It worked out. I refinanced later to a conventional. I didn't have to worry about my PMI, but you have to start somewhere, right? So I highly recommend FHA loans. It just comes down to your situation. Talk to your lender about that. Now, a VA loan is going to be typically for military or active military, or somebody that actually is also retired from the military. There are a few differentiating factors there that you just want to keep in mind. Talk to your lender and make sure that they're actually specializing in VA files, please. My family's military background, so I'm really picky with who I send my VA clients to. I'm picky with all my lenders, I will say that. But it's just something that you want to make sure you're aware of, because I just hate when people tell VA clients, oh, you don't have a down payment, you don't have to worry about it. No, that's a lie. You do have a down payment, but the nice thing is that you get to roll it into your purchase price. So if you were buying a house for $500,000 and your down payment was going to be $30,000, you can roll that into your loan and not have to worry about paying for it up front. So making sure you're aware of that, highly important, obviously, but also make sure that you are working with a lender that actually knows what they're doing versus just trusting somebody off of, a website that you saw. There's a lot of companies out there, honestly, their marketing is really spot on, and they make people believe that they're the only company. I won't say the name, but it has the VA word in it. And they make people believe that they're the only company. And it's sad though, because I've had people call me and literally tell me, Alexa, I really want to buy a house. I'm VA. I've seen your videos. I just don't know like if I can buy one. This company said no, that my credit was below a 640, which is what they were looking for. I was like, well, what's your credit? I'm at a 600 or I'm at a 580. I get them in touch with one of my other lenders and they qualify. So just keep that in mind. Not all lenders are the same, and no, not just one company can offer you VA or FHA or conventional. Typically, all the companies offer these loan products. It's just that different products are going to be specifically better with certain companies because that's more of what they actually try and push business for. Again, I don't want to make it too confusing, but just talk to your agent and they should be able to explain this in a way that you are going to see, okay, this is a reason why they were saying not to go with this company and to go with this company. Now, on the term of VA, you want to make sure you also know what a COE is, and that is your certificate of eligibility. So the certificate of eligibility is basically what we need as, not me in this case, but the lender, okay, our team, what they're gonna need in order for them to be able to say, hey, congratulations, we are able to qualify you under your VA eligibility. So make sure that your lender helps you. I've seen some lenders that I'm just like, wow, like they really don't want to work. They will tell the client like, go figure it out and like get me your COE, but they don't know how to get it. And literally my lenders have called for our clients to get that COE because the client doesn't know how to get it. And we're just like, look, just give us the information. We got it. We're going to go ahead and get your COE. So just make sure the lender you're choosing is taking the time to actually help you out. I mean, come on, like they're going to end up making some money from the sale that you're going to purchase. The least they can do is really help you get everything in order and not stress you out. Now, also for my VA folks, a funding fee. So a funding fee is going to be a specific fee that the VA is charging you for using their veterans program. That's the simplest way to think about it. It's a one-time fee that you will pay, and either you can pay for it upfront or you can roll it into your loan as well. And then some people might actually be able to have this waived. It's on a case-by-case situation. So definitely talking with your lender will be able to determine like if that is something that you qualify for. And of course, if they're able to remove it, that will definitely save you some money. Typically, it's about 1% of the sales price, so just keep that in mind. Now, our last terms that we're gonna go over are your comps. I have had many people ask me, what is a comp? What do you mean when you're saying a comp? Okay, so it's a competitive market analysis, basically where we're showing all the houses that have sold in that area for us to tell you realistically what we should either buy this house for or sell this house for. Now, if you're on the buyer side, you want to make sure you're actually offering, again, the price that you're going to get the appraisal back for as close as possible, because I will say we do not have a magic crystal ball. We cannot determine the exact amount of what the appraisal is going to come back at. But we do have the comps, and this comps approach is going to allow us to see what other houses have sold in the neighborhood that look like the house that you want to buy. So this will allow us to determine whether the price is actually higher than what you should offer, or if it's right where you should offer, or if it's actually below. And at that point, of course, typically if they price it below, it's because it's either going to need some work, or sometimes they're in a situation where they want to get multiple bids in. So that is something that you just want to keep in mind. And of course, if you are a seller, you also want to make sure that you're not pricing it too high to the point where you're not going to get any traffic. Although I do know some people are literally, they're like, I don't care. I don't need to sell it. I just want you to put it at the most that I could sell it for, because I'm looking for that one particular buyer that is going to buy my house because they're going to see everything that I've done to it, all the custom work that I've done to it, all the beautiful, architecture that we've done, and the beautiful pool and the spa. And hey, so keep that in mind. Comps are definitely something that should not be underestimated, but also obviously it's on a case-by-case situation. And the last one is going to be seller concessions. Now, seller concessions is a hot topic right now, and that's why I told you guys to go check out the video where all the commissions and everything has always been negotiated, the NAR settlement, check it out. But essentially, a concession is essentially where the seller agrees to pay a certain amount for your closing cost. So in this case, if you're the buyer and you're buying their home and you're like, hey Alexa, I really need you to help me find a house where I can negotiate as many closing costs as possible, because all I have is $20,000 for my down payment. I don't have any more money for the closing costs. Please help me find a good deal. And then of course, at that point, we want to find a seller that is very motivated, that is more than willing to cover your closing costs because they want you to buy their home. Talk to your agent about this. Really, really important. You have no idea how many people I have seen that come in and make us an offer asking for closing costs, and my sellers are just like not having it. They're like, no, I'm not gonna give any closing costs. Like, tell them to come back when they have money. So just keep that in mind, because there are other sellers on the opposite side where I've actually had them tell me, Alexa, give them closing costs. I need to move this house. I want to get out of here. I need to move. I need to relocate, make it happen. And we're willing to give closing costs. So again, this is on a case-by-case situation. And the last tip I want to share with you guys that you should be aware of, and it's not really a contract term, but it is a allowable contribution that you can ask for in a contract. So I'm going to add a little screenshot here for you guys to actually reference this. But essentially, when you're under a VA home loan, okay, you're only able to go up to 4% of the sales price toward concessions, meaning that only up to 4% can actually be given to you in the event that you're looking to buy a home. So if you were to ask for 6%, the VA is not going to allow for you to get any additional credits. If you are a conventional loan, metrics are slightly different. So less than 10% down payment will essentially be up to 3% of the sales price. And if you don't know what I mean by sales price and getting the percentages, the simple way to do it is just get your price of the house, multiply it times 3%, and whatever that number is, that is your allowable amount that you can get from the client. So 500,000 times the 3%, and then just go ahead and get that number, 600,000 times 3%, you get the point. Now, between 10 to 25% is actually going to be up to 6% of the sales price, and more than 25%, they will actually allow you under conventional to get up to 9% of the sales price. Now, if you are under FHA, the maximum amount of contribution is actually 6%. So I actually recently had a agent. They gave me an offer. I just think personally that the agent didn't know really what they were doing, or they just were pushed over by their client. Long story short, they came in asking us offering us $10,000 below asking price. I was representing the seller, she was representing the buyer. And then on top of that, she asked us for up to $12,000 in concessions, which were actually above the allowable amount that she could ask for in this particular offer that they were making. So just keep this in mind, okay? Because when you make an offer and your agent is representing you, they're also obviously, they're representing themselves in terms of like how they're carrying themselves and how they're going to communicate with the other party. But also the fact that she did that, when I presented the offer to my clients, I was like, I don't really know like how competent of the people like this agent is going to be for the people that she's representing. And personally, this could be a deal that can also go very, very badly if this person is actually not financially also ready, but not only that, not being advised properly. So just making sure that your agent is really taking the time to explain all of these terms to you, super, super important. Everything that I went over today, I think was personally very, very important for you to know, especially if you're looking to buy, sell, if you're relocating, if you're looking into investing. Keep these terms in mind. We do have a free guide down below for you guys if you're interested. For my buyers, we have a buyer guide. For my sellers, we have a seller guide. These are books that I put together for you guys to really help you understand more about real estate. If you are looking to buy, sell, invest in the Texas area, especially in El Paso, please feel free to let us know. My email is linked down below. You can also follow us directly on my social media accounts. We typically see those every single day, so it's a lot easier for us to get a reply back to you. Also, if you are looking to relocate to another place that is not in Texas, we have agents, trusted agents that we feel comfortable enough to recommend. Personally, I have vetted them to make sure that they are the best in their area. So if you are looking for somebody out in a specific location, please feel free to let us know. And with that being said, I want to thank you so much for sticking around with me. I hope I didn't bore you. And of course, until the next one, I hope you have a great day.